What's up, everyone? It's Karthik with MoneyVest. There was an absolute buying frenzy in this market with the heat map that looks like a sea of green. Not a sea of red, but instead a sea of green, with almost every stock, except for staples, was pushing higher. More specifically, technology, with Tesla up over 8%, Amazon 2.5%, Microsoft, Nvidia, Google, Meta, Apple, you name it, Palantir, SoFi, the entire financial sector on the back of some very strong earnings from JP Morgan, Wells Fargo, BNY Mellon, Morgan Stanley. Bank of America is actually going to be reporting on Thursday. But all in all, I mean, this was just a fantastic day with stocks, S&P 500 up almost $1 trillion on the day. So this right here was pretty much the entire S&P 500's market cap change after being up almost 2% on the day, with Magnificent 7 up over $500 billion, so $564 billion up, with the top 10 up over $612 billion. So in other words, 60% or a little bit over 67% of the gains coming from these top 10 stocks that rallied like there was no tomorrow. And this right here was in the individual stocks. Of course, Tesla leading the charge up to $428. That's exactly the resistance that we have talked about. We'll discuss that in more detail today, but up over 8%. Meta was up over 3.85. Got Nvidia also charging back up 136. I closed out my Nvidia put for a 76% profit and my SOXL puts for 85% profit. Got Google up over 3%. You got Amazon 2.5% for Microsoft as well. And of course, Nasdaq here 2.45% gain after a softer than expected inflation print on the core side, which we will discuss. I've got my own views about this. Netflix up over 2.4, Apple up almost 2%, S&P 500 1.83, and the Dow Jones also rallying over 700 points here on the day. So of course, you'd imagine the portfolios, they were absolutely popping. The long-term portfolio up nice $21,000 or a little bit over 2%. These are my options that I ended up closing out. So the Nvidia put was closed for eventually a 77% profit, and then the SOXL put for 2250 was closed for a nice 85% profit as well. So this was the change in the options portfolio, up a little bit over 1600 in this portfolio, which is the options specific portfolio, also pushing higher. And then of course the long-term portfolio was up more than that, way more than that, 21,000. So if you want to get access to all the trade alerts, find out exactly what we're buying, selling, and also there's a lot of members, there's a lot of experienced traders and members in our community. Just ask anybody in our Discord, and we're absolutely crushing it when it comes to options trading and long-term investing. That's our main goal to help you with, is to build a very solid portfolio of high-quality individual stocks, as well as teach you the right way of selling options so you can run the wheel strategy on many different individual stocks, including ETFs, so you can actually generate some income and grow your portfolio with us. So link's going to be down below. There is a 16% annual discount that helps you save a little bit of money, so that comes down to $24 a month. And of course, you get access to the entire MoneyVest website, as well as all the trade alerts, the members only videos. Everything is going to be included with this. So again, link's going to be down below if you want to join us, and feel free to take advantage of this discount. Our engagement has shot up as we have had a lot of new members coming in, and a lot of experienced traders and investors are sharing some of their best plays, highest quality trade ideas, as well as a lot of members are sharing their wins on a regular basis. So again, 547 messages sent, 58% increase on a day in one single day, and of course 35 more communicators compared to a day ago. So we're definitely seeing a lot of engagement, and you can find a lot of great ideas in our Discord. Okay, let's come back to the reason why this happened. By the way, very quickly going over to the sector analysis. So financials were leading the way, up over 2.5%, followed by discretionary. This includes your Teslas and Amazons, 2.5%. Then of course QQQs, Nasdaq 100, 2.3%. Nasdaq XLK up almost 2%, S&P 500 1.8%, TLT, even TLT got a little bit of relief rally today as yields came down on the back of those core inflation data, 1.7% higher than we had communication services, 1.6%. This includes your Google and your Metas. Energy sector, 1.5%. Now, this is a little bit more problematic because oil prices have been moving higher. I'll break this down here shortly, but energy prices also are on the rise because we actually witnessed that in the inflation report. We broke this down in the live stream. We had utilities up over 1.4, materials up almost 1%, industrial 63 basis points, real estate 42 basis points, and the only sector that actually did not perform well was staples, which was actually selling off about 34 basis points here on the day. So let's take a look. Core inflation rate slows down to 3.2% in December, less than expected. So this right here was the actual number. I did a whole live stream breaking down these numbers, but 3.2% is where core is now sitting, exactly where it was back in June, July, August of 2024. However, headline actually ticked up to 2.9%. Now, for some reason, I've been reading this in our Discord, I've been reading this in YouTube, on the live chat, in the comments. For some reason, people seem to believe that the rate cuts are back on the table. That this is going to actually spark some kind of rate cuts. And I'm not really sure if I follow. Because if inflation is at 3.2 or it's accelerating to 2.9 on a headline basis, yes, you can make a very, very good case that, it is less than what we had expected. We were expecting 3.3. It came in at 3.2. So the market rallying on just that very fact could be short-sighted. Now, I could be wrong. And look, markets had a fantastic day. I'm not trying to take that away from myself or from anybody, right? We just saw all the gains. We just crushed it today. Markets were fantastic. Everything was popping higher. And a lot of the fan favorites, including NVIDIA, Tesla, Palantir, SoFi, just absolutely crushing it. But we also have to understand the psyche behind this move. Markets went up on a short-sighted catalyst that core inflation came in better than what the expectations were. Disregarding the fact that headlines on the way up and core on an actual basis, on a factual basis, is still at 3.2. It's still way above where the Federal Reserve needs inflation to be. And so somehow there's expectations, from the market, or basically what I was reading in the comments or live chat, is that there's going to be more rate cuts on the table. How so? Rate cuts only happen when we are in a deflationary environment and the Federal Reserve is really trying to stimulate the economy. They also happen when there is a recession, right? Because rate cuts are only there to fix recession or deflation. And we have neither. We don't have a recession and we certainly don't have deflation. So this idea that more rate cuts are back on the table, definitely, in my personal opinion, is not logical, or it doesn't have any sort of basis behind it. If anything, it kind of reaffirms that, okay, we can actually keep rates where they are, or basically see one or two rate cuts in 2025. But to see more than that, I think would be a little bit more short-sighted because, of course, markets are ripping on this better than expected print. However, on a headline basis, on a month-over-month headline basis, we actually increased 0.4%, which was more than consensus. And year over year, we came in at 2.9, which was, again, 0.2% higher than the previous number. But then month-over-month core inflation is really what the market's focusing on because that's also what the Federal Reserve focuses on. So 0.2% month-over-month, which was better than what the expectations were. And then year over year, from 3.3 to 3.2%, yes, it's coming down. Yes, it's a little bit better than expected, but doesn't take away from the fact that we're still higher. And again, I'm just giving you an objective analysis, right? This is what you guys come here for, so don't blame me. I'm giving you a very, very realistic objective analysis that, okay, markets rallied on the fact that we came in better than what the expectations were, but do you think that that is a little bit short-sighted considering that we are still higher than where the Federal Reserve wants inflation to be? And worse, on a headline basis, we're actually starting to move back up. So only that is something that I need you to think about, not something that's going to dictate our decision making, because we don't let macro data like inflation really dictate where we're buying, where we're selling, what we're doing. But it's a good sort of proxy to help us better understand market expectations and where interest rate expectations can go moving forward. And right now, as you'll notice, that interest rate expectations are still pegged for one rate cut in 2025. So this does not change the fact that we're going to see more rate cuts. We're still pricing in for one. We're just pricing in for one sooner. So earlier this was in July. It's been moved up to June. So June 2025 is where the markets are now expecting for the Federal Reserve to cut interest rates another 25 basis points. And then that's it. That's really where the markets are pricing in. That's going to be one and done for 2025. So just again, something to think about. Again, I'm super blessed and happy and grateful for what the markets gave us today, but just want to be very objective in why they rallied, and then whether there's actual weight behind this rally, whether there's actual fundamental reason as to why this gains or the sustainability of these gains are going to be there. So that's something to think about, obviously. Stock futures tick higher after S&P 500 boasting its best day since November. The Money Invest Index is, of course, back over 3.17. Now, obviously, I've got a confession to make. I am more excited and more happy when there are deals and discounts than a little bit more indifferent when the markets rally like the way they did today, only because I by nature like to be more aggressive when there is red. When there is a lot of selling pressure, I like to sort of buy and be more aggressive and sell puts, and again continue to sell calls so that I can take advantage of those deals, as opposed to, of course, markets going higher. It's great. I mean, you're going to see gains, and again, look, the last 200 years, 75% of the times the markets have gone up. So you're bound to see gains. You're bound to see days like today. You're bound to see the markets going up. If you are invested long enough, you're going to see days like today. What you're not going to see as often is those deals and discounts and those coupons. And that's really what I live for. That's what I love, because when you see that, you can actually be very confident. Okay, prices are coming down. That means risk is coming down as well. And if you're investing when the risk is coming down, you're going to benefit on days like today significantly. So nonetheless, 3.17, we're back in the neutral zone. The 10-year treasuries are dropping back down after the core inflation coming in better than expected. 4.6% is where we're at, and oil prices continue to move higher. We're back up to over $80 a barrel here. 81 bucks is going to be that next resistance. So this right here is the level to really be focusing on. And like I said, interest rate expectations are back pegged to June 2025 is when we're going to see that first rate cut. So coming over to the markets, and very important technicals that we have to break down, because I essentially shared a list of all the stocks. There's a lot of stocks in our Discord channel that I shared the resistance levels for. And it looks like we're starting to creep up to those levels, or we're starting to already break out above these levels. So first, starting with S&P 500, you'll notice that we obviously broke out of this range. So this right here was the resistance that we were talking about. So right here, we broke out of that level because, of course, we gapped up heavily. So this right here is the gap that we left. And right now we're on our way back up to almost 6,000 points once again. But I know if I mention this, I'm probably going to get hate commented again, but we are still in a downtrend. That's how we are. I mean, that's just the technicals right in front of you. I'm not making these things up. So if you simply take a look at what this channel is, we are in a lower high and a lower low still. We haven't broken out of this just yet. So this right here is the downtrend. And as expected, right, as we were talking about, that a technical rebound, a little bit of that momentum back up is possible within the context of this downtrend. And only then we tag this lower high. And this is what happens in any kind of uptrend and downtrend. It's not a straight line up. We go up, we go down. We go up, we go down. And that's usually the overall trend for the market. And if you go back to 2022 or even 2023, this is August of 2023, we essentially from our all-time highs back then at 4,500, we ended up dropping over 10.6%, but that wasn't a one straight line down. It wasn't like, we made a top here in July and next thing you know, we're down like 10%. No. What happened was we essentially sold off a little bit over 5%, and then we rallied over 4.5%. Then we sold off another 6%, and then we rallied a little bit over 4%, and then we sold off finally another 6% to be down over 10% from our all-time high. So it was really much in stages, and what we could be seeing right now would be something like this maybe, or maybe even something like this, because really it's the trend that I want you to focus on, which is the lower high and the lower low pattern within which it's still trading right now. Now, of course, this can resolve into a higher high and we can shift that direction and we're back up to all-time highs, so the buyers step in, but there is no confirmation of that yet. And that's the only thing that I really want to address objectively in this video, is just be careful, be cautious. Yes, today was fantastic, but don't get sucked into this by just going crazy and buying a lot and just going all in or something, because we just don't know if there's any confirmation for that higher high, higher low pattern. Or in other words, that change in that direction yet, because every kind of downtrend has these big bursts of buying momentum here. Boom, right here. Massive rallies coming in, a lot of green candles popping up over here. So every single time you see these bounces back up, these technical rebounds, and so it's right in front of you. Again, I just being very objective, literally going over the charts, really helping you understand how these trends essentially play out. And again, I'm not saying that it's going to get rejected here again and we're going to see another lower low, but just saying be careful, wait for this breakout before these long bets are back on the table. So a 6,000 breakout is very important for S&P 500. 6,000 is what we're really watching for. Same thing with the Nasdaq Nasdaq composite. You'll notice this was the entire downtrending channel. So you go back, watch the videos, lower highs and lower lows. This was the potential for that move back up. And of course, 19,500. And this right here is going to be that target right now that I have on Nasdaq, sitting all the way up to 19,950. So a little bit under 20,000 is going to be that level to watch for the Nasdaq. Coming over to individual stocks, Apple also coming up to its resistance. So inside this red rectangle, so 239, 240. That's going to be a level to keep in mind for Apple. We haven't really broken out of this resistance for Apple yet. Tesla, on the other hand, is now starting to break out above its 428, 430 level. So we've gotten rejected here a couple times. We got very nice support validated over here at 375. That's exactly what we talked about in our previous videos. 375 was the very critical level that it needs to hold. If it holds that level, there's possibility for us to retest back up to 420, 430. But if in any case it broke down below this level, then of course low 300s was a possibility. But 375 held up really well for Tesla, and now we're starting to see that momentum back up. And right now we're still within the context of this, like I said, this lower high, that's this resistance, so to speak. So if we take out this $430 level, then officially we'll be breaking out of this resistance and of course this previous lower high for Tesla. So that could be a very nice shift in the direction for Tesla's chart. Coming over to Nvidia now. So Nvidia on the day pushing up also to 136. Looks like it's really just consolidating sideways, and anything around in and around these levels can be considered both as a support and or a resistance, because it's been hovering around these levels for a really long time, and resistance and target's going to be back up to 143, 144 for Nvidia moving forward. So that right there is going to be that level to watch. Advanced Micro Devices also seeing some buyers stepping in back up to almost $120, a little bit over 3% higher. But this right here is the overall pattern for AMD. Advanced Micro Devices, so again, lower highs and lower lows, and support level is going to step at a 113, 114 for AMD. Coming over to, let's see, Palantir. Palantir, $70 is a resistance, so that is a level that we're really watching. So inside this red rectangle is going to be that level to keep in mind for Palantir. And again, this was the entire analysis from the previous video. You know, a little bit of a technical rebound is possible, but in order to do that, we really need to break above $70 in order to see that upside. But this right here is the downtrending channel, lower highs and lower lows. And again, just being very objective, I can really remove this lower high and lower low, not give you an objective or honest analysis and be like, yep, we're going to the moon, you guys. We're going to the moon. This is it. This is the buyer frenzy. This is the rally we're waiting for. We're so back, and we're going back to all-time highs. But then I would not be doing justice to either you or myself or to my education or analysis. So I want to be very objective with where we are. We're in a lower low bounce technical rebound, as we call it. And this is going to be that lower high. But first, Palantir needs to break out over $70. SoFi also, look at that. Look at that. I mean, this is just perfect. We got bounce off of that support. I picked up at $13.75. That was a great purchase, by the way. Pats on the back. Up over 14.7, almost 15% from those levels, getting up to 1550, which we also talked about as a resistance. And it looks like we closed right above 1550, up almost 7%. And now the real question is whether we break out above this lower high or if we get some kind of rejection and, of course, rotate back down. So this right here, there's two outcomes for SoFi. We're just going to have to wait and see whether we change this direction or if we get rejected moving forward. Coming over to Meta Platforms, and Meta here on the day also up over 3.8%. So very nice move to the upside, validating that support here in the low 600s, 597, 598, bouncing right back up. Support level is going to be in the low 600s again, resistance all the way up to 633 to 638 moving forward. Coming over to Google, a lot of consolidation sideways. So there is a very clear area of support and resistance for Google. It's really just been consolidating sideways in that range for a time. and resistance all the way up to 197 to $202. Support level is going to stay put at 188 for Google. Coming over to Microsoft, Microsoft also getting a little bit of a technical rebound. Resistance is obviously going to be staying put right about here inside this red rectangle. 432 to 441 is going to be that level to keep in mind for Microsoft. Coming over to PayPal over here, and PayPal also pushing up over 2.8, almost 3%. A very nice move, 3 back-to-back green days, and we've got a resistance now waiting for us here in the 89 to 90 bucks for PayPal, and then Visa also pushing higher, validating that support at $304. Next resistance all the way up to 321 for Visa as well. And then finally, we come over to Enphase and Costco. Enphase, despite a very strong day in the markets, still struggling. A lot of sellers stepping in. A red candle on a green day definitely suggests a lot of weakness for the stock. Support level is going to stay put at $64, $65. Resistance all the way up to as much as $76, $77 for Enphase. And finally, we come over to Costco. And Costco here also consolidating sideways, pretty much moving in tandem at that support at $907, $908 per share is the support for Costco. So hope you all enjoyed this video and a complete update on this market. To summarize, fantastic day in the markets. Congratulations to everyone who absolutely crushed it. A lot of buyer frenzy in this market after the softer than expected print on the core inflation side. However, just be mindful that we are still within the context of a downtrend of lower highs and lower lows. And until we see a breakout to higher highs, until we take out our previous high and break out of this downtrending channel, we are still within the context of some weakness from a technical analysis standpoint. So that's where we are. MoneyVest Index is back over to 3. Make sure that you drop a like, subscribe to the channel, and also if you want to join, be a part of our MoneyVest community with that 16% annual discount, you get access to all the trade alerts, all the members-only videos, as well as the MoneyVest website. Everything will be available with the link down below. As always, happy investing. I'll see you all in the next video.